Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So I wanted to talk about the main reasons, some of the context behind why banks own precious metals, gold and silver. Someone actually emailed me this question a couple weeks ago asking, why central banks own so much of the precious metals world and why they're so involved in it since, obviously our money isn't backed by physical precious metals anymore. I actually made a video a couple of days ago talking about lawful money, legal tender, the separation between those, and also over the years why we departed away from gold, obviously from the gold standard. So this is definitely something I want to share with you guys and break down. This article is actually extremely interesting and also shows the fundamental value that precious metals have. From a third-party perspective, it really wouldn't make sense to see central banks buying and owning so much gold and silver. Obviously, silver stackers understand the fundamental values, but from the outsiders looking in, it really would be a little odd. So I did want to break this down and share some light on it. It also shows the opportunity and how much potential precious metals have in terms of money, quote unquote. So let's jump into this article. Why central banks will buy silver. Money is a store of wealth or value, a medium of exchange as well as a unit of account. In order for money to be effective in the above, it has to have the following properties. Divisible, should be divisible in smaller units. Portable, able to carry it around, therefore a high value should be able to be contained in a small space and weight. Homogeneous, one unit should be the same as any other unit. Durable, should not be able to be easily destroyed or eroded. Valuable, should have intrinsic value, normally because it's desirable. Should not be able to be created or discovered without reasonable effort, normally a commodity itself. Gold has all of the above properties. It is for this reason that gold has been used as money for centuries. It is for this reason that central banks hold gold as a part of their reserves. In fact, it is through holding gold that they could get people to use and trust that their fiat currencies. Silver also has these monetary properties, and it has been used as money for centuries, actually over 6,000 years. Furthermore, central banks also used to hold silver as part of their reserves as well as issue it in the form of coins. Today, and they're talking about constitutional silver when they mention that. So today, silver has basically been completely demonetized, with virtually no central banks holding silver as part of their reserves. This demonetization happened over a period starting in the 1870s and ran until the late 60s. The fact that silver is being completely demonetized while central banks were still holding gold as a part of their reserves is a major contributor as to why some see gold as money but silver as a commodity. Which is interesting because I see gold as more of a commodity and silver more as an asset, since silver is so highly incorporated in all of our technology and industrial uses. Gold is more for jewelry, more for stuff like that, necklaces. Silver is more in the technological era that we're going in and used in all these gadgets. But anyways, the Bretton Woods was virtually the final nail in the coffin for silver's use as money. When the nations agreed to structure their monetary system around gold and the US dollar to the exclusion of silver, today we are basically in a post-Bretton Woods era with monetary landscape having been decimated by the effects and Bretton Woods and that which followed. Many would say that central banks hate gold based on the majority of their actions over the last 100 years, at least. However, it's not that central banks hate gold or per se, but they hate it when they're interested in to do so, and they love it when they need it. For example, they love it when it gives their currencies credibility during a time when fiat currencies are being questioned, like during most of the 70s. During this period, until about 1976, the central banks were net buyers of gold. During the 80s, there was still pressure on fiat currencies, which forced central banks to hold their gold. During this period, central banks' gold reserves remained virtually constant. By the 90s, the financial landscape had changed to a situation where it was in most of the interest of most countries to devalue their currencies to contribute to the credit bubble. During this period, central banks were not sellers or gold, and this continued about 2008, 2009. And this was net sellers of gold. So the 2008-2007 financial crisis brought a major change in the financial landscape, forcing central banks to become net buyers of gold, which they continue to be. Again, much like the 70s, it is their interest to buy gold to support their suspicious currencies. So since 2007-8 financial crisis, there have been big developments. The BRIC banks to replace the US dollar as the reserve currency for world trade. This is set to intensify as more and more currencies are being put under pressure by the continuing financial crisis. They're talking about hyperinflation, pumping out the dollar, losing its purchasing power. In order for any development to be successful, something like gold has to be used to provide necessary credibility. There has to be a medium. Gold is definitely that structure underneath all money. This will and is already causing a scramble among nations to get as much gold as possible. The U.S. is the exception to this, since it's not in interest to lose the U.S. dollar reserve status, which is with this happening, it won't be long before central banks buy silver, especially given that silver has all the monetary properties that gold has. Exactly. Back in the day, in Egyptian time and in biblical time, gold and silver were seen as equivalent. An ounce of silver was just as valuable as an ounce of gold. It wasn't until more recent times that they started to put gold as the royal metal. It comes out of the ground roughly 9 to 1, so gold is not much more rare than silver is. So this might seem unlikely to most, but given the recent historical attitude towards silver, however, the only reason that we're not interested in silver is because it was their interest to hate it. Now, however, it is fast becoming well aligned with the interest of surviving as monetary authority or country, and even superseding the current order. After all, it's not like having silver is the new thing for them. Fractional analysis of gold to silver ratio. So now they're kind of going into the gold to silver ratio, what I previously just mentioned. So on the chart, I have marked, or this is a 100-year ratio chart, by the way. So on the chart, I've marked 70s gold and silver bull markets with black points, 1 to 5. So from the low in the ratio to the high in the ratio, and compared the latest bull market, which I've marked with blue points, 1 to 5, from the low end of the ratio to the high end. The 0.5 occurs lower than 15. As illustrated, we will have a very accurate fractal pattern, similar to the one in the 70s, but bigger. So you're seeing this chart here. It goes from 1920 all the way to around 2000, and that would be 2020 or 15, around there. So you're seeing the big battle for this level right here. It's definitely on a bullish trend. Both patterns started at the bottom of the 100-year range on this ratio. In fact, at the major bottom, 1968 to 1980. The current pattern is not completed yet, and it would suggest only will compete at such a point much lower than the ratio of 15. Such a completion of this pattern is consistent with the bullish and fundamentals of silver and gold in relation to the paper money, which I was mentioning earlier. Understanding that a lower ratio will likely mean higher gold and silver prices, note that there is a major battle for the 80 level of the ratio. So right now, we see the gold to silver ratio at around 82 to 1, meaning it takes 82 ounces of silver to amount to 1 ounce of gold. Earlier, a couple months ago, the ratio was as high as 95 to 1, which is extremely high, which means something had to change, and it needs to normalize back out, either meaning that gold has to depreciate, has to lower its value towards silver, or silver has to appreciate and raise up towards gold. And now we're seeing the ratio around 82 to 1. Historically, the ratio is around 60 to 1. I've personally seen it in around 75 to 1 because I've been stacking silver for about 8 years now. If you're talking really, really far back, it was around 40 to 1, very far back. But I think a normal ratio is around 75 to 1. If obviously, I still think that's extremely exaggerated, and it should be a lot lower than that, especially looking at how much it comes out of the ground, only 9 to 1, and silver fundamentally has the same value as gold when we're talking about performance-based, studies. But anyways, so this is interesting to talk about. I definitely wanted to share this with you guys because central banks definitely are owning gold, and I definitely think they see the value in silver. I would not be surprised if banks do own silver as well, not just talking about constitutional silver. I am interested to see, what would have played out if the gold standard would have never been, thrown in the gutter, because that was our best shot at holding somewhat of a fundamental, fluent type of financial system in place, since our money was backed by real, with real value, with intrinsic value. I mean, look at the things right here. For something to be money, it has to be divisible, portable, homogeneous, durable, and valuable, and that's what precious metals are. The dollar has only a couple of these things. Yes, it's divisible, and yes, it's portable, but it's definitely not valuable. It has no intrinsic value. It is desired, but only because we say it is. But when you're looking at, and it can be created, and there's so much fake money going out there as well. I mean, look at how precious metals are, no pun intended, to dig it out the ground and actually find it. So it's rare. It's actually something, and it's used in technology to such a high degree. paper money is just printed, by the boatloads in these banks, pumping them out in the system, causing hyperinflation, causing the dollar to collapse. And you can see, and then we're in debt, and then we're trying to pump out more dollars to get ourselves out of debt by replacing it with debt, and that's never going to work. So precious metals are definitely the alternative for us silver stackers. Obviously, it's not the answer. We're definitely too deep in a hole, but I definitely know the central banks see the fundamental value in precious metals, as long as all the precious metals enthusiasts. But I wanted to share this article with you guys because I thought it was pretty interesting. If you did enjoy this video, make sure to smash the like button. The link will be in the description if you want to check it out for yourself and go over the charts and stuff. I thought this was pretty cool. I thought this is something that, I haven't talked much on the channel. I mean, I've talked about the gold to silver ratio. I've talked about, lawful money, legal tender. I've talked about dollar deflation, hyperinflation, but, the central banks thing is definitely something interesting to look at from a different point of view. But I'm going to wrap this video up here. I do appreciate you guys for tuning in. If you did enjoy this video, make sure to smash that like button. Subscribe if you're new. I post daily videos. I'll probably post another 2 videos a day, so stay tuned for those as well. Thank you guys for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.